Hi, my name is Justin Lin, investment strategist at Global X ETFs, and welcome to this week's Express Lane. Last week, AI fever continued to sweep through the US equity markets, with semiconductor stocks notching their fifth weekly win in a row. Year-to-date performance for that particular group of stocks is now at almost 70% year-to-date. Australian equity markets, however, weren't as lucky as they digested the third RBA rate hike in a row. Now for the green lights of this week. While semiconductor stocks appear to have run extremely hot over the past few weeks, it's actually being backed up by strong earnings forecasts. In fact, the forward 12-month earnings forecast of semiconductor stocks now suggests a forward PE of just 28 times. That's way lower than 45 times of the pre-war heights. From that perspective, these stocks may actually be looking quite cheap. What about the yellow lights? Well, Chinese equity markets are likely to be in focus this week as President Donald Trump visits President Xi in China in what would be the first time a US leader has visited the nation in almost 10 years. The two leaders are likely to discuss a range of things, from trade to sanctions to the Iran war, and the outcomes are likely to have significant consequences for equity markets. Now, for red lights. The interest rates are likely to be in flux this week as the US goes through what is known as a super data week. CPI, PPI, and retail sales will all be released, as well as the confirmation of Kevin Walsh as the Federal Reserve Chair. All of these events will have significant consequences for interest rate expectations in the future. Thank you for joining us this week on the Global X Express Lane. If you have any questions or comments, please leave them down below. I look forward to seeing you next week.